So today we're going to be talking about how an underwriter for a USDA loan is going to look at your income. The way that an underwriter looks at USDA income is your income for the loan is unlike any other. Seriously, the way that it's looked at is just completely different. So I want to walk you guys through it today. If you're thinking about a USDA loan, I'm going to have a link to my overview of it. So this is all about how the underwriter looks at your income, because this is where most of these loans, if they're going to go sideways, if they're going to go blow up, it's because of this. So let's talk about it. And you may be like, oh, my lender will know. Maybe, maybe not. It's funny. I was talking to Barbara, our USDA underwriter, and we were just talking about a lot of the misconceptions with income, and it's really rampant, and it's because USDA is very unique. So here's the thing you need to know. USDA has two big things going on. Number one, your debt to income, most restrictive program. We're going to be trying to keep that at 29% on the front, meaning that the total monthly housing payment versus your gross income is 29%. And 41 or lower on the back. So what is the back end? The back end is whatever's reporting on your credit report as the minimum monthly payment plus that housing payment versus your gross income, okay? This program does not play. This is the most restrictive program on debt to income that exists. I cannot stress that enough. It is an amazing, amazing program if you qualify for it. Right? And lots of people do. I was looking at numbers and I was like, there's a lot of USDA business occurring. So there's a lot of opportunities here, but you got to know the debt to income is no joke. Now, the other thing is the household income. Okay. I'm going to treat this as if it's just one person and it's you because it gets real complicated. But if I do this as one person, it will make sense for the rest. Okay. So there's an income limit. So let's just pretend that the income limit's $80,000, okay? And you live by yourself and you make under $80,000. Cool. So let's talk about how an underwriter looks at your income. So let's say that your salary and you make $75K a year. Fantastic, great, you're under the limit. Let's say that your salary and last year you didn't get a bonus, but this year you got a $10,000 bonus. Yeah, guess what? You're over the limit, okay? With a normal loan, we wouldn't give you that income to qualify because you don't have a 2-year history. But USDA is gonna go, whoa, there's more money there, and push you out, okay? So let's do this a little bit differently. Let's say that your income is $70,000 and the bonus is $10,000, but you've only received it for 1 year. Now remember, we said that 80 was our cap. So you're like, okay, so I'm at 80, I'm good. Maybe, I don't know, let's check at the debt to income. So your debt to income, I'm hitting you with the $10,000 bonus here, but I'm not gonna give it to you over here. Yep. So there's basically two different income types we're looking at. We're looking at qualifying income, which is what we can use for the debt to income, but then we're looking at overall income, which is using to make sure that you stay under the income limit. So look, if it's 70K, your debt to income's in that 29-41 range, party on. If you need that bonus, right, in order to be in that range, just because they're counting it here does not mean you get it over here. You don't have a 2-year history. So they're going to use it against you. I mean, let's be honest, that's what it is. They're going to use it against you when they're looking at that total income limit that you have to be under, but they're not going to use it with the debt to income because you don't have the history. Okay? Let me give you another example. So let's say you're self-employed. And in 2022, you made $75,000. No, let me do this differently. 2022, you made $150,000. Wow. And 2023, you made $75,000. You're like, awesome, I'm under the limit. No, you're not. Because what we're going to do, and this is where it gets really messed up, we're going to do a 2-year average, okay? Normally in lending, if the income's declining, we go off the declining income. But when you're looking at USDA with the income limits, we're going to go off the 2-year average. Yep. And if you're like, okay, let's just use different numbers. We're going to pretend that the 2-year average is under that 80K. So let's say your 2-year average is 80K, and the most recent year is 50. Okay. You're like, great, 80K, I can use, nope. If it's declining income, we're going to use the lower income when we're qualifying for the debt to income. Okay. This is where people get tripped up because they're thinking about it like a normal loan. And the way they look at income is not. It's that simple. So you want to make sure you're working with a lender and a lender's team, because that's the thing, like the lender, I am only as good as my team. My team, they are awesome now, guys. I'll tell you though, over the years, it took a long time to get here and these guys are amazing. So, my team knows this, but you may have a loan officer that knows it, but the processor doesn't. Or maybe the broker knows it, but who he sends it to doesn't. So it's really important that you guys are working with a team that understands this nuance, because this is the number one reason that people think or they get pre-approved for a USDA loan, but it doesn't ever close because they're over the income limit because of one of these little tricks. Okay, so really important. Those were the two examples I thought would be the most easy to understand, because this is pretty complicated. But you need to think of it as, okay, with USDA, there's really two things going on. There's income I can use to qualify, but there's also that household, income limit I need to stay under in order to qualify. So two metrics. Now, last thing, because this is very important with this loan program, household income. It's the only loan that takes into account all household income. So let's say that just you are on the loan, but you're married, okay? Or you have a boyfriend or a girlfriend, or you have a roommate. Their income comes into play, okay? But they're not on the loan, so their income is going to come into play on that income limit, but not on the qualifying for debt to income. Yeah, I know. Look, here's the thing. It sounds like, oh, it's really not. It's really not. Like, look, if you already went to the USDA website and you're like, okay, I'm under the income limits, I think, right? Have a lender look at it. I'm in the area. Awesome. My credit score is over, 620, 640. Fantastic. Like, don't be deterred by this. I just want to make sure you guys understand it, because it's unique to the program and there's nothing else like it. And this is one of the reasons, the program might have not the best, easiest, it's not known to be the easiest, and it's because people trip up on this. But if you know what you're dealing with going in, it's easy. Okay, so look, I hope that was helpful. Questions, comments, as always, get on the calendar. We're happy to explain. For this, I definitely would be having you talk to Sandy. And we're happy to help you guys. If you guys want to get a USDA loan, fill out the application, let's go. But please make sure you check first that you're in an eligible area, and check the income to make sure you're in the ballpark. Because sometimes, we'll get that application and we'll be like, you make $400,000. This is not going to work, right? So you want to make sure that you're within the income limits. I'll have the link. It's so easy, guys. And I'm going to be honest. If you're like, Jen, I don't want to click on the link. You do it for me. No, I will ultimately, but no. Look, this is a loan where if you can't invest 5 minutes in understanding those two components, you shouldn't be doing it, because otherwise what's going to happen, the lender delivers everything to you on a silver platter. You end up looking at a house that's not actually USDA approved. You get mad at the lender. You need to have that map in your mind. You need to be comfortable typing in addresses. We are working together on this, okay? So look, as always, thank you for reaching out. If you do, thank you for watching. I hope it was helpful.